Sunil, the glass half empty argument, I guess, is out in the public, whether it is China or risks to global growth. Why don't you pour in the full drink? What is the glass half full approach? I mean, what is the good news for FY17?
See, number one is, as an equity investor, I would like to be optimistic.
But it's time to be realistic also, right?
No, so I think the point
between optimistic and
so I'll give you my perspective. So one is obviously when you're looking at investment, you look at it with some hypothesis. So the hypothesis is very clear that India has grown to $2 trillion and India is going to $4 trillion. So I think that is the key hypothesis. Now, an optimistic person like me will believe that this will happen in 6-7 years. Someone who is not as optimistic will believe that it might happen in 8-9 years. What has happened last year obviously has come as a disappointment, and we have to also admit that it was a year full of challenges. So we had two back-to-back monsoon failures. We all believed, and we have two strategists and economists here, that low inflation was good, but in fact it turned out to be not that good. We all believed that oil price falling is good for us, but it is good till a particular level, and then it definitely impacts the global economy and the global growth, and we also got impacted. And on back of it, we also had a very uncertain scenario related to China and some of the other large countries. I think earnings are a derivation of all these. One additional thing is that this government has been working very hard, and there has been some cleaning of the system. So once the cleaning up starts, I think the initial maybe 1 or 2 years are tough years. The cash economy takes a back seat. You have some sectors, some industries, some corporates who get impacted with sudden tightening of the system, and I think that is also what we are seeing. But as we speak, a lot of these things have started to now get reflected in positive, vibes, positive news flows. So if you have cement production, which is up 14% in February, if you have refinery productions up, consumption of oil products increasing, to some extent selectively capital good companies also starting to see awarding of a lot of new orders. So I think these are all signs that finally, maybe what we expected 1 year back is starting to play out. It might have got delayed, but definitely it's there to play. So I think we are quite optimistic, and we all expected earnings to grow, and it did not grow. Now no one expects earnings to grow. Maybe it is possible that earnings might finally start to grow.
But that's your nature, Sunil. I mean, you're always optimistic. Frankly, from last 10 years, I've never heard you bearish or cautious.
I think that has helped. So the country from 1947, zero to 1997 to 2007 reached $1 trillion in economy. From 2007 to 2014, which was a very bad period for global markets, you had Lehman and you had this and that, still our economy became from $1 trillion to $2 trillion. Equity investors have still made money even in that point of time. And even if you take some negative returns of last year, where investors maybe have lost 7-8%, I think on a 3-year basis, equity still stands to be the best performing asset class. So I think it pays to be optimistic. And my call is very clear that we as Indians have all our savings in India. If you invest in a fixed deposit and the bank lends it to a corporate and the corporate defaults, then you're not going to get your fixed deposit also back. And for the corporate to repay to the bank, they will have to make more than the FD rates. Right. So it is better to be invested in that corporate rather than to be invested in that thing. So
I have some data I can challenge what Nifty has done in the last 5 years, but I'm not getting there. We'll argue that data some